Hey traders, Dennis Wilburn, the AutoPilot Trader. Are you ready for the big reversal that's going to happen in the market next week? This week we had bearish reversal candlesticks on almost every one of the indexes. The S&P was in particular. Take a look at that chart. In today's session, we've got that plus 3 stocks that we're keeping our eye on. I think you'll be interested in that. I'm sitting there going, is the bear market rally over? We'll see going into next week. Looks like it could be. Let's get into today's session right now. Good afternoon, everybody. This is Dennis Wilburn, the AutoPilot Trader, and we've got Steve Farrar joining us from downtown Honolulu. No, close to downtown Honolulu. And then Anil Parikh from Delaware, or somewhere east of the Mississippi.
That is correct.
And so, welcome, gentlemen. We basically have a market that is rolling over with some momentum. Steve was mentioning before we got on air that he believes that the market is basically still, the underlying is really quite strong. And so he's looking to do pullbacks, I'm assuming. And
that's correct.
And Anil, I don't know where you come out on this. What's your stance? Are you buying the dip, or are you going to trade it to the downside?
No, I think I'm buying the dip. The indicators are pretty strong. I'm worried about what the Fed meeting next week and what they're going to do. But other than that, things looking good right now.
Okay, excellent, guys. And so I just want to let you know that I'm sensing that the market could, in fact, turn over a little bit deeper and do a deeper correction. We're going to take a look at that. And so I'm more in the camp that this was just a rally within a bear market. As we'll see here shortly, that the NASDAQ and the Russell has, in fact, pulled back into bear market territory. So traders, remember that all the materials we do present are for training purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital. Tracking right along the 40% line, very pleased with that. And just trying to keep the oscillation on the profit and loss statement being very manageable. It's been a little bit more calmer in some of the things that we've been working on. Yeah, Barry, we'll take a look at that on CDNS. With that, before we go in and do the market analysis, what I want to do is let's jump into the stock picks for this week. We'll do the market analysis a little bit later. And so the first stock pick that is up for today is from Anil. It's this one right here, Microsoft. Now that's an oldie but a goodie, man.
Yeah, looks like I have a weekly triple screen signal on it. It has come down quite a bit today with the market. I think it's a good entry point right now.
So you're gonna basically buy right now, 5% stop loss.
Yeah.
Yeah, I like that. You've got a gap right here where it gapped down. So it's kind of working its way into that gap, but it's almost the midsection, which tends to be a strong level of support. His 5%, let me find out where his 5% stop loss would be. And from current levels, 5% would actually put you down below the 50-day moving average. This is where, yeah, I agree. Nice looking chart, Anil, and as you said, it is slightly below the 200-day moving average, and so it is doing a really nice pullback, an excellent pullback to trade the dip. Long-term momentum looks pretty good over here, although the TSI, the momentum on the shorter time frame has rolled over. But as long as it doesn't cross over here on the longer term chart, that's kind of my indicator that, yeah, I want to be looking to trade this. So excellent.
Seeing the same thing on the triple screen. Weekly MACD looks strong, daily.
And then Steve, what was your pick for today?
S-Wave.
This
WAV.
This is Shockwave Medical. I love the term. I mean, what do they do? They do the paddles for shocking a person's heart back into?
No. They're. I don't know exactly. My interest in it is, I know it's in the medical space, and it's one of the leading stocks in the IBD 50 and has been for a while, and it's been trending for a while. It had a good response to earnings, and it's going sideways, and I think it's viable right here on a breakout. Or if it pulls back slightly toward the, I don't know what your purple line is, the 8 EMA.
Yeah, there's the 8.
Yeah.
And there's the 20.
Yeah. Between now and the 8, I think it's a wonderful place to be buying it. And I would aggressively, I'd be buying it today. I like its strength relative to a down market.
Okay. What type of your stop would be below the low?
Right under the 8 period. If I get in right now, right under the 8 period moving average.
Okay. And let's just do a real quick snapshot of how far that is away. Yeah, it's
very close.
About 5%. So cool.
Correct.
Okay, I like that. Did you say you have bought in right now?
I bought in a while ago, and I'm looking to add. I'll probably be adding to my position today, maybe on Monday. Yeah.
Excellent. I like that. So that's it with Shockwave Medical. When I saw it, looked up on the IBD stock checkup list and saw it was Shockwave, I go, wow, what a cool name. Nicole asked the question, what's your take on a down Friday is usually followed by a down Monday at the open? Yeah, it could be, Nicole.
Those kind of relationships have been studied for a long time. And if there was an edge, everybody would know about it. There's no edge to trying to trade that.
Like I wouldn't blindly go in and buy that, buy it or sell that going across the weekend because so many things can happen on the weekend. There are some. Anil, did you say the Fed meets next week?
Yeah, I think they are meeting in Jackson Hole and all that thing.
Okay, the Jackson Hole. Yeah, that could be a news-driven event for a lot of things with the market. So speaking of which, let's go ahead and jump over into the markets and let's take a look at what's going on with the S&P, the spiders. Okay, here's what I'm seeing, guys. A daily chart where basically we got back above the 50% retracement. Now, that's the 50% retracement of this drop, as you see from the highs back in first part of January, all the ways to the low back here in the middle of June. It achieved a 50% retracement. Now, one of the things I'm looking at very seriously is that the TSI, my momentum has not shifted. I'm talking my longer term momentum has not totally shifted. Now, it is showing that it wants to bend over a little bit. That's one. So that's kind of a neutral type of thing, or even a bullish side for me. What have I got for price action? Price action is showing us a bearish reversal signal with a shooting star, which also turns out to be a bearish harami. If it breaks below the 50% line, where am I looking at going? Probably down here to the 407 to the 389 level. And then what will it do from there? Will it bounce in this area around here and then take back off? We don't know. That would be a interesting pullback into that area, which would be about a 50% pullback and retracement, and still leave the existing current uptrend intact. And so that's what I've got with the spiders. I will look at if I want to trade the inverse ETF on the spiders, which is SPXU. Okay. It's doing a nice little reversal down here. May get a run back up into, up the 50-day moving average or so, or maybe even a 50% retracement up to about $16. Just be aware when things start to shift, I want to be fluid enough to where I can shift over to the leveraged ETF inverse, trade that back up to the upside. And if I can pick up 20% on it over a 3, 4, 5-day period, that's excellent. And that's what I would be looking at doing. So that's for free, guys. No, again, the NASDAQ, what are we showing here? The NASDAQ is showing not a shooting star, but at least a bearish harami, which is a reversal candlestick on the weekly chart. The TSI momentum on the weekly chart has already rolled over and is starting to move down. Any kind of a pullback up into the midsection of this week's candlestick or the 8-day moving average might give us an opportunity to go ahead and take a short trade to the downside. But where's its target? At best, down about 312, which will be about the 50-day moving average. Yeah, Nicole, on the SQQQ trade, those are SQQ and some of the other leverage ETF are trades that I reserve for the AutoPilot Trading members. So what else do I want to take a look at on the NASDAQ? The NASDAQ, take a look at, does the NASDAQ's, this is the actual NASDAQ, is the candlestick the equivalent to the candlestick on the actual Qs? And the answer to that is yes. We have a bearish signal on the NASDAQ. And what's interesting is if you can draw this line in here, let me get the line, is just basically take this line across here. Where is it lining up at? Well, one, it came up, broke through the downtrend line, but now is reversing back down through it. Now, it may drop below the open of last week. If that does that, it will not be a bearish harami at that point. What about the Russell IWM? Okay, similar story here. We have a reversal candlestick, so I have to respect that. However, my momentum on the weekly chart, the longer term momentum has not shifted over, even though the shorter term momentum has. And so with that being said, I'm not going to take a long position until I get some kind of a candlestick reversal signal off of a level of support, because I'm looking for my three-step setup, which is off support, candlestick reversal signal, and my momentum on the daily chart crossing back up. So those are my triggers to get back into the trade. Guys, what's your take on that?
I pretty much agree with what you're saying. I think what I notice mostly in the market is that the current leg on the weekly chart that we're in is the strongest up move in this pullback.
Yeah.
That often signifies a turn in the market. I say 80% of the time. So if anything, I'm looking for potentially a brief pullback, maybe 2-3 bars at the most, and then a buying opportunity. I will buy the dip as soon as the dip is obviously over, whatever, and I expect it to be shallow, and it could be over in the next day or two.
And on the longer term, see this little box that I just drew in there? That's the magic fib box. That, per Charles Dow, you're expecting some kind of pullback between 1/3 to 2/3, which fits the Fibonacci, of a significant move up. And so that would be a target zone for, and I would put an alert right at the top of that, the midsection, and just above the bottom of it. And if prices move into that level, that would be a potential area to jump on a trade. But again, need to see that reversal happening. And right now, it's not happening.
That's right. And it may not even get to that box. It could be much sooner than that.
I agree. It may not. However, there is a strong probability that it will, because that's just, you can go back in history and look at the pullbacks, and they tend to move into, especially if we do get the reversal, and this is an if this candlestick, this TSI does in fact reverse and cross to the downside, that even increases a higher probability of reaching down into that fib box. If it does not cross, then I would look for a lower, that it not going down that far. It may only go to looking over here on the daily chart, to the 20-day, which is right there. So that's what I'm watching right now. And I'll look to trade to the downside anytime the price action moves back up into the wick of this weekly candle, or approximately the 200-day moving average. The other thing that was really kind of interesting about this whole thing is, go back to the S&P. And I thought this was really kind of remarkable this morning when I was taking a look at it, is it worked its way all the way back up to the 200-day moving average, and that happened to coincide with the downtrend line. And that happens so stinking often. Anil, what's your thoughts?
I think I right now agree right on with what you're saying. And I'm seeing that in the short-term MACD, similar patterns in short-term MACD and long-term MACD. So
Okay.
Time will tell out, see what happens here.
Yeah. And it depends on just how aggressive an individual, trader is, whether they want to, to take a downside trade would be a counter trend trade. Counter trend to the daily trend. And also the longer term, weekly, because we've had a reversal on that. So next. And here's my pick for the week, guys. You ready? Drum rolls, please. No. Zim. Now you may be going, well, Dennis, why? Shipping container business has dropped down into the lower. But what caught my attention about Zim is, one, I'm not going to buy it here. I'm going to wait till I get a little bit of a pullback, but I want to buy it before the 29th of August. So I'm waiting for a setup to buy it before the 29th of August. Why? This has been paying some absolutely very significant 5% plus dividends. And so if you're a dividend, trader, and I'm not necessarily a dividend trader, but when I saw that on a $48 or $49 stock, that on the 8th of September, they're going to pay $4.75 in dividend, that caught my attention. And so it looks like it's putting in a consolidation pattern. That hammer is in place. And so I'm looking to buy this probably somewhere between today's low and into the wick of this candlestick right here. And I'd want to basically hold on to this as long as possible, because it paid $4.75 this quarter, $2.85 last quarter. The quarter before that, it paid $17. Is it going to continue to do that? We don't know. But right now it is. And so that's where I'd want to take advantage of that. What's your thought on that?
Dennis, one note of caution. When a large dividend is paid out, you need to own the stock before the dividend date, the ex-dividend date. Not on that date, but before. But often, not only, associated with a dividend payout is a consequent drop in the stock price of the equivalent amount.
You're absolutely right.
Yeah, so it's not a done deal. You're going to make 5%.
No, well, no. You're absolutely right.
The stock has to rise to get
and so
trade.
With the track record that this thing has been showing, that's assuming that it is basically put in a consolidation and is going to move up from here.
Yes.
And if it does, then yeah, those dividends look pretty interesting. But yeah, you're absolutely right. They adjust the price of the stock based on the dividend that's being paid.
Correct.
On this particular one, you have to be a holder of record, if you will, on the 29th. That's what I said, is that I have to buy it by the 29th.
The ex-dividend date is the 30th. I didn't.
And the ex-dividend is, I think, around the 8th of September.
Oh, okay. Okay.
So now this is kind of a nuance that I don't do very often, but I just wanted to throw that out to everybody. This is a stock that we made some really good money on last year. And it looks like it still has some good potential upside. And I'll know that I'm right if I actually buy here and we break out of that downtrend line right there. I'll know, okay, yeah, we're in the right ballpark. So that's my pick, guys. And what's Neil? What's your thoughts on it?
On my triple screen chart, it's in a downtrend on a weekly chart.
Yes.
And the weekly MACD is also negative. So I do not like it right now. I'll have to see some positive action before I do anything on it.
Okay. So excellent. And so, yeah, this trade, it's got some work to do, but at the same time, it could wind up being excellent longer term holding. And that's I'll just leave it at that. Not trying to convince anybody to buy it. I'm just saying that, this is one of the things that I look at. When would I know I was wrong? If I undercut this low right here, I'll say, okay, I was wrong and I'm out of here. I don't care. I don't care about the 475. So, hey, I got a couple of questions on stocks that have come up online. So a couple of stocks that questions came up. CDNS. This is a stock that is showing some. Actually, CDNS was on some of the IBD list. And
it's on the current list.
Yeah, the question, is it forming a handle? And the answer to that is no. You determine your handles being formed from an IBD perspective off of the weekly chart. And as you see, what I'm seeing in the weekly chart, we basically ran through the past high here, and now we're getting basically a reversal candlestick. And so at this point, and if it did start to put in a handle, it would be considered a flawed handle from an IBD perspective, because this high took out that high over there, and oftentimes those turn out not well. So that's what I got on CDNS. And
on the other hand, it's just broken out with what Dr. Wish from Wishing Wealth blog, he's an IBD type trader, does his own analysis, is a pullback that was longer than 3 months from the all-time high. We've just taken it out. So we're flirting with what he calls the green line breakout. And that often when it occurs is a very strong bullish event. That's all I say. And I think we're close to breaking and holding above that green line. So
that could be, but at the same time, traditional technical analysis say it failed to hold the breakout right there at 192.80. That was a failure, and we've got a bearish reversal signal on, and it may be it needs to pull back a little bit to gain some momentum and then break out. The higher probability is it's going to pull back into fall from the sky all the way back down here. Probably not. I mean, this is positive, but it's also at the same time a weak candle on the weekly chart.
And it could be a reversal on the daily today, depending on price action. So that's not clear.
Yeah, I'm not seeing the reversal on the daily. I'm seeing actually it's fallen below the 8-day here.
Taking today's high out on Monday is a reversal.
Well, yeah, but it's not a reversal yet. Driven Brands. Are either of you guys following this one?
Yeah, I've looked at it. It's an IPO and it's got a very interesting pattern, but to me, it's not yet quite tradable. I don't know.
Okay.
I would look for a pullback to get long.
Yeah, I don't know anything about it, Nicole. What I am looking at, what it is respecting the 820 line as it moves up, but it's starting to move up into past levels of resistance, where that may result in stalling. The past level of resistance currently is, from current prices up a little bit, is about 5 all the way up to approximately 8%. But I agree with Steve, you need some kind of a little bit of a pullback. It may be just either the moving average is catching up with it. The volume looks okay. It's right about at average.
The conventional IBD suggestion for IPOs is when it breaks the high, the high that was made nearest the IPO coming out. So we're looking at 35.56. A breakout above that could be an entry.
Here's where we're sitting, guys. That kind of covers what we're going to be covering on the stocks and the ETFs and also the market analysis. And as you see, I am highlighting here is that anytime you go from coming out of a bear market to very quickly going back into a bear market is not a sign of strength. Which brings me to a big question that we have is, where are we at on this chart? Some might feel that we're down here, okay? And that from here, it's all green, blue sky, and here we go. We're back into a new move. Some of us may feel that we're more here. Well, this is what would be considered a bull trap. We've hit the high, we've pulled back down and pulled up. And I think if we look at it nominally across it depends on what kind of a bear market we're in for. If we're in for a 1.5-year bear market, then guess what? We've got another year to go on the bear market. And right now, we don't know. We don't know what's going to happen. So how about you guys? Where do you think we are on this chart? Something really good to take a look at. So that basically kind of covers it for today. Remember that I absolutely believe that price movement patterns are repeated. They are recurring patterns that appear over and over with slight variations. This is because the markets are driven by humans, and human nature never changes. And so just a reminder, if you want to find out about how to trade the leverage ETFs, I love to trade TQQQ. That's one of our mainstays. We also trade with the market. If the market does go into goes back into a significant correction, we want to be able to jump onto the side of the inverse leverage ETFs. And so we do that with our AutoPilot Trading service. And you can check that out. It's online. And there's the address, and there's a QR code for that. So that's what we've got for today, guys. Stephen and Neil, thanks for the great comments and the great stocks.
Okay.
Thank you. This is getting interesting. Next week should be very interesting. See where it goes.
And so, yeah, without a doubt, we'll say aloha. God bless everybody.